A new all-time high for Amazon, a new name for Research in Motion, and a new CEO for Chesapeake Energy. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Let's go right to the big board. Fourth quarter GDP contracted for the first time in 3.5 years, but Wall Street didn't seem to mind. Much of the decrease was attributed to cuts in government spending and lower exports. Joining me in studio today, Tim Hansen and Brian Hinman. Let's get to our top story, guys. Research in Motion finally unveiled the new BlackBerry Z10 smartphone. The company also announced it is formally changing its name from Research in Motion to BlackBerry. New phone, Brian, new name. How much of it's going to help?
Well, the new phone is really good news for the remaining BlackBerry users, but I don't really think anyone else cares. Really what BlackBerry needs is they need a phone that is going to be good enough to win converts and win back lost market share, and I just don't know that this is going to do it.
Yeah, Tim, when you look at the market share, in 2 years it's gone from 20% to 5%. They got to get at least some of that back.
Well, the good news is that historically speaking, companies named after fruit make really good phones.
Awesome.
So this name change is a huge thing for them. Having said that, everyone, the consensus seems to be that whether you like the phone or you don't like the phone, and the reviews have been mixed today, is that the universal agreement is that it's way too late. And I think that's true. This is an ecosystem thing, and Apple's got a great ecosystem. Android's got a great ecosystem. They have lots of users, lots of apps. BlackBerry doesn't have that, and it's probably too late to catch up.
Yeah, Brian, on that note, financial media can engage in hyperbole, but it seems like in this case, this really is their last chance. When you look at the stock, however, it has doubled in the last 3 months. Do you want any part of the stock?
No, that's all the reason more that I don't want a piece of the stock. I mean, their business model is fundamentally changing. They're doubling down on focus on hardware, and that's going to be much lower margins and much tougher sledding as opposed to their services business, which is a cash cow.
Amazon's fourth quarter earnings came in lower than expected, and the company also lowered guidance for 2013. Naturally, shares were up today, hitting a new all-time high. I don't get it, Tim. I am a shareholder, and I don't get it.
Well, I think this speaks more about Amazon's shareholder base than it does about Amazon. I think the company, operations, and its stock have become detached somewhat because shareholders have almost, they have this feverish belief that Jeff Bezos is building something really long-term and awesome, right? And so it doesn't matter what the short-term results are, so they latch on to whatever is good. In this quarter, the good thing, despite all the bad, was that there was some operating margin improvement. But their operating margins are still razor thin. I think anytime you get a really feverish shareholder base like that, it's a weapon for Amazon because they can raise money at almost no cost, and that finances everything that they want to do. But I just don't see what they're doing where shareholders can have a reasonable expectation of even like a 5-year return.
How much of this is Jeff Bezos and his effect on the stock?
I think an incredible amount of it is Jeff Bezos. I mean, for a decade plus now, he has been setting expectations that he's going to be building a business for the long term. He doesn't care about losing money, even for long periods of time. And he's been getting buy-in from the Wall Street community somehow. And so I think what we're seeing now is just the fruits of that decade-long expectation setting that he's been going through.
Tim, when you look at the stock, it's at an all-time high. Maybe there's a halo effect at play here. Are you buying it? Are you shorting it? Are you staying the hell away from it?
No, I'm staying away. Amazon, they want you to believe that they're spending a lot of money in building something great, right? But here I'll take my semi-regular drive-by on Living Social. They made a 29% equity investment in Living Social, a company that managed to lose $300 million on the operating line last year, and almost $900 million if you count their write-downs, and they booked some equity investments. So net, they lost $600 million on $500 million in revenue. That's ludicrous. Not everything Amazon touches turns to gold. And I just don't see how when you've built a business on really low prices and super high convenience. Consumers, I love Amazon as a consumer. It's revolutionized consumerism in America. But for shareholders, it's too hard or too ridiculous or too something.
All right, let's get to some of the day's movers and shakers. The Herbalife soap opera continues. Shares down on reports that the health and wellness company is gearing up to battle hedge fund manager Bill Ackman. Brian, Ackman called Herbalife a pyramid scheme. That seems like the sort of thing that you don't say in public unless you're pretty sure yourself.
No, not only did he call them a pyramid scheme, but he put $1 billion behind that accusation. The reason I think the stock was down today is last night, the CEO, Rick Goings of Tupperware, came out and really discredited Herbalife's business a little bit. Now, it's important to know that Tupperware knows a thing or two, and Rick Goings knows a thing or two about direct marketing businesses. That's how Tupperware does its business. And I believe he called Herbalife's business Swiss cheese. So that gives Ackman a little more credibility in this fight.
Boeing's fourth quarter earnings came in higher than expected. The company says the FAA's temporary grounding of the 787 Dreamliner will not have an effect on its finances. How much of that is wishful thinking?
I think that's probably true for the near term. I mean, obviously there's some very significant potential long-term issues for Boeing. I think they've got a lot of work to do to solve this problem. And I mean, from an investing standpoint, if things work out well for them, I think the upside is probably not that great for the stock because it hasn't fallen that much, and a lot of optimism was already priced in. Whereas if something catastrophic happens, a lot of downside, and so you're in a situation as an investor where you have capped upside, lots of downside. Doesn't make it that attractive of a proposition.
Roller coaster a couple of days for Peabody Energy. Yesterday, the stock up 5%, but giving back those gains today. Brian, what's going on?
You know, Peabody is a coal company, and coal is a commodity. Over the past year, it's lost 30% of its value because people are scared that the long-term use of coal is in a secular decline. Stock's going up one day, going down one day. This is what we should expect from a business like this where there's no visibility.
And finally, Chesapeake Energy CEO and founder Aubrey McClendon announced he is stepping down as of April 1st. Shares up big on the news. How bad a CEO was he if the shares are popping when it breaks that he's stepping out of the game?
I mean, this is another example, I think, of a very egotistical CEO who paid himself extraordinarily well, built a fairly large and successful enterprise, but basically thought of shareholders as being second-class citizens. I think it's probably good for shareholders that he's going. But having said that, despite all the ridiculous things that he did, his legacy does include building a reasonably impressive E&P business out there in Oklahoma.
One growing trend in the consumer space is sensor technology, devices that monitor your home, your personal health, and more. Our man Rex Moore spoke with Sean Dubravik of the Consumer Electronics Association to learn more.
I think the sensorization of consumer tech is a very interesting trend. You're seeing that show up in a variety of different places. Verizon showed football helmets that have sensors built into them so they can measure the shock that's incurred when you take a hit playing football. I saw a company that launched sensors you would put in a potted plant, and it would tell you when you need to water that potted plant, so it's a moisture sensor, a measure sensor. I've seen sensors integrated on surfboards to tell you how well you're surfing, sensors that measure your posture and help you improve your posture. All the health and fitness sensors that we're seeing, we're really seeing the density of sensors increase, so there's a lot of interesting innovation happening there.
Brian, when you think about all of the applications at play here, it really seems like there's a lot of potential in this space.
It really does. I mean, there's a commercial that Nissan put out right now about having a sensor in a tire to gauge the tire pressure in your tire. It honks when it's full, which is great because no one really knows how to use the tire pressure gauge. You can never read the numbers on it. So little things like that you're able to measure more precisely given these sensors, a ton of potential here.
Tim, we saw the football helmet in the spot there. We got the Super Bowl coming up. Right now, the Niners are a 4-point favorite. And some people like to invest their money betting on the Super Bowl. So for folks out there, how about a pick?
I'd probably take the Ravens and the points based on the defense and their ability to control the ball.
You're a football fan. What do you say?
Yeah, since my Bucks aren't playing this week, I'm going to stick with the NFC, go with the Niners. I think everyone has forgotten about Frank Gore.
Yeah, the Tampa Bay Buccaneers. They came so close this year.
Runner-up this year.
Really sorry about that. All right, that is all for Wednesday's action. Let's look ahead to Thursday. Brian Hinman, what's a stock you've got on your radar?
I've got Dunkin' Brands on my radar. Earnings tomorrow. They're starting to open up stores outside of their core stronghold. Their most recent announcement was stores in California. Want to see how that's going.
All right, Tim Hansen, what about you?
UPS, which reports, in a world of really unreliable economic data and forecasts, whether it's coming from China or United States or anywhere, if companies are shipping stuff around the world, that's a good sign for the economy. If it's not, it's a bad sign. So UPS rather, can be not even if you're not interested in the company specifically, it can be an interesting economic barometer.
Okay, that's going to do it for today. For Tim Hansen and Brian Hinman, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
People on the show may have interest in the stocks they talk about. and The Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.